What is up, everyone? Welcome to the first normal format AMA. And this is the February 2025 AMA. We've got over 50 participants in here. We have been dropping tons of content. Tons more content is coming for the course as well. And so I will be answering questions along with George Belcher, the Magnum Opus head of marketing and pretty much right-hand man for everything. And so let's kick it off. We're going to power through the first hour, a bunch of the questions from the community channel. Then we're going to open the floor to open mic by raising hands. So George, hit me with the first question, please.
All right, one moment here.
Cool.
So we're just going to go in order here, Lance. So first question, curious what specific setups, tickers, or strategies worked best for you during the tariff M&A driven market? Any key plays you'd recommend studying from that period? So basically the Trump period before too.
Yeah. So this has come up quite a bit, and this even a couple of weeks ago, I was with a trader. Actually, it was a Trillium trader, and he brought up the fact that he wasn't around back in 2018. And so, what's the best way to kind of get up on that market and kind of this playbook that we see so far in 2025, which is the kind of the Trump regime, the tariff playbooks, increased M&A. All that other stuff. And so look, a lot of people weren't trading 7 years ago. And so the best thing to do, of course, you can still go back and find all those charts. So you can go through a Google search, you can use some of the news sources, whether it's Newswatch or Bloomberg or whatever, Trade the News, briefing, and you can go back and look through what those big headlines were. And especially if you're using a financial news service like a Bloomberg, a Trade the News, a briefing, whatever, it's going to give you the tickers that were most in play. So what you'll find, for example, is FXI was, of course, the China ETF. And so this would move a lot. But then you also have ETFs like Yin and Yang, which are 3x ETFs. You, of course, have stuff like we've seen the spiders move on these tariffs. If the spiders are moving, of course, it's going to affect VIX and volatility. And so what you really want to do is find out what the best basket of tickers were back then. And then, so that's essentially back testing, right? You're looking back over time for what that data is to build that. Or, of course, what you can do is forward test. So any headlines that occur going forward, you can look through and see what was moving the most. There's times where you're going to get, there's certain railroad companies or certain made in America companies like a GM or something, where depending the headline, those can be very, very relevant. So it's some combination of finding what the big headlines were, finding what were the more marginal ones, and then just building what's the optimal basket to act on for some of the stuff. And then, of course, the same way we do that for the tariffs, you can do that for M&A. You can do that for various Trump tweets. There was all sorts of Trump tweets at the time that moved all sorts of tickers. There were times, I can't recall quite off my head, but I think there were times he was talking about, Fiat Chrysler and GM. There's stuff like, all sorts of mergers. Like, of course, Biden was very involved in the US Steel ticker X merger. So a lot of that is just going to be paying attention to the news flow and starting to just observe and pay attention to that.
Very good. Next question here, we've got Lance, and I'm just going to read this one direct. Said, I'm wondering if in the future course content that's still being edited, will there be any videos talking about how to read the box, how to rate the stock as bearish or bullish from -10 to 10 based on the box, like you did in 2018? Similar questions, would love to learn around how you utilize the tape during trading and planned content around the topic for the course.
Yeah. Sorry, George.
Oh, and then it said any ETA on those videos for the course.
Yep. So one common thread on some of the requested AMA questions so far was a lot on reading the tape and the box. And so the short answer is yes, this is something we absolutely have content on. And so the thing with reading the tape and the level 2 box, this is some of the most time intensive content to make, just as far as finding the right video, figuring out how you can just visually portray this in an easy manner. So we've recorded probably 1 or 2 videos. We've got a massive backlog that we're still getting through. So yes, there will be some. Yes, it's funny. This person actually asked a great question, because there literally is a video I'm doing that is how to rate the box on -10 bearish to +10 bullish. I did not plant that question, by the way. And so in the video, I explicitly go through like, what is the most bullish box you could ever imagine? For example, the most bullish box, you're going to see very thin offers. You're going to see, very large bids. The bids are going to be aggressive. Bids will be going high. People will be paying the offer. Nobody's going to be hitting the bid and stuff. And what's the most bearish box? The most bearish box is then the opposite. You've got very thin bids. You've got offers, large offers going low, refreshing offers, all sorts of, scary, scary things hitting the bid. Nobody's paying the offer. So if you were to take something like when Save the airline, it got its deal rejected by the federal court. If you see that tape on Rewind, what you'll find is that stock just absolutely melted. It's just totally one-sided. So I have video content on stuff like that. It is coming. As far as the ETA, anything that's been recorded, probably out within the next couple months. But the more videos beyond that, it's going to take time. Like reading the tape stuff is just by far the most time intensive for me to produce. While on the subject, next week we have some really cool content on the way where someone I'm very good friends with, Dr. Tom Crawford. He was a elite performance psychologist and coach for the U.S. Olympic team, a lot of CEOs and a lot of traders. He's similar to Dr. Katz. In fact, they've been long time colleagues together. Whereas Dr. Katz doesn't really kind of accept new work so much anymore. Dr. Tom Crawford does. And so I have an amazing series with Dr. Tom Crawford and Dr. Katz already recorded under production. So a lot of cool stuff on the way. But yes, reading the tape is high on the list.
Yeah, just to follow up on Lance there, I think it's 8 new videos dropping next week, which are really great. And then honestly, for the next 3 months, we have new videos dropping every single week, including tape videos. And as Lance said, more in-depth stuff on that coming too. So every week for quite a while, a ton of new content. Next question here was, is it possible to get the V strategy playbook? And I think we talked about this as the right side of the V, possibly.
Yeah. So this was a question I saw, and the very quick answer is yes. We have a lot more content on that coming, so I'm just gonna quickly answer that. Yes.
Yep. So for sure. Next one here, again, just reading through. Says, I have no problems finding in-play stocks. On average, 10 per trading day. My issue is narrowing it down to about 4 stocks which I can focus on and prepare for before the market opens. Number 1, how do I figure out beforehand which stocks have a potential for moving or ranging? And then number 2 is, what kind of filter do I use?
Yeah. And so I think every trader generally faces this issue. Like if you believe in the mindset of I'm going to try to find the broken slot machine each day, like there are traders out there that probably just trade NQ or ES or Tesla every single day. I don't think that's the optimal strategy. I don't know anyone that really does that particularly well. So if you buy into the fact that I need to find the best tickers that meet my strategies each day, it takes work and it's not a perfect science. And so pretty much every open, I would have my watch list, and you are struggling to find like, okay, which one is going to offer the best opportunities and which ones do I need to find, optimize my focus on. So a lot of times what I would do is I would have that list, but then I would also use price level alerts. Most software has the ability where you can set alerts at different price levels. I would also use either 1 share or 100 share actual real position. So if something was doing something weird, I would be paying attention to it. So let's say a stock on my list is starting to sell off and I've got maybe 10 stocks on my watch list. One thing you can do is if a stock's at 115 and I know, oh wow, if this gets to 111, I might be pretty interested at that position, or I at least want to type it up. You can set an electronic alert, or what I would do is I would just have a limit order, a bid for maybe one share or 100 shares at $11.70 or $112.20. And so a lot of that would help me be more aware of where things are moving. The other thing, of course, is that's the benefit of having a really good trading pod. A lot of the most active opens are the most opportunistic. Take the DeepSeek open on that following Monday. There was a lot of crap flying around, right? A lot of stocks down a lot. How do I try and find the stocks making the best move? Well, that's where you really need filters, you need alerts, and ideally you need a pod. So I think what this trader's touching on is like, look, there's not a magic answer. This is something we struggle with all the time. But what I would be doing is setting the price alerts, setting the 1 or 100 shares. And I would also, of course, the more you can operate within a pod, and then inevitably we can't be perfect. There are times where you will find retrospectively that, oh, wow, I missed a really good opportunity. The best thing you can do then is if you missed this opportunity, say, why did I miss it? Was there anything I could have done better to prevent that? What solutions can I put in place? So I think it's just a very common problem where we are just human and we have limited eyes, we have limited focus. Then, of course, the other thing too is part of that is just screen space and real estate. So I think all of that is important to try and optimize so you don't miss this stuff.
Yeah, well said, Lance. And I think his point about the pods is super critical. As Lance has said before, one of the best indicators he's got is when other top traders are contacting him about a trade. When other people have the same sense and signal that you do is a good sign that it's something to step up to. Next question here. How are you adjusting your trading when market conditions shift? Adjusting from high strength / low weakness to low strength, low weakness, or when there is not a clear market theme and low opportunities?
Yeah. So this question actually came up with S&P Capital a lot recently. And so I would say generally most things don't go from working really, really well to then not working and you're losing money. Generally, the stuff that's working well, it starts to work less well, then it becomes break even, then it becomes negative. And so what I would say is like a lot of the time, doing those daily reviews, doing those weekly reviews, paying attention to who's making money, who's not making money, a lot of that stuff helps you be more attuned to the market. And then the other thing too is paying attention to the overall indices, right? Like if the overall indices are pulling off or if the overall indices are range bound, a lot of the breakout plays aren't going to be as great. And also, what are the overall leaders of the market doing? What sectors have cracked? And you'll find that as certain sectors crack, a lot of the momentum stuff just isn't going to work as well. And so a lot is paying attention to that stuff. A lot is being attuned to your own trading data, right? Like if breakouts have been working really well, or if overnight momentum's been working very well, what does your P&L look like when when you come in the morning? If I'm doing a lot of overnight momentum and all of a sudden for the first day in 4 days, I'm red when I walk in rather than green, hey, that's a sign. And so I think most people aren't responsive enough to those clues. And so of course, like the quickest thing you can do is just reduce your size when you start to see some of those signs. The other thing that I think is worth pointing out and interesting, most themes don't really last a very, very long time. Like I would say, if you think about most major market themes, stuff that's working really well might last a couple weeks to a month. So you really want to strike when the iron's hot and pay attention to when it's not. Like if we look back to the semiconductor theme in 2024, there was a time when, oh my God, like ARM breaks to all-time highs and it just explodes. Whatever semiconductor breaks to all-time highs and it just explodes. But then are those holding up or are those starting to fall back? When those semis really capitulated and we're pulling back, if the leaders have capitulated, I don't want to play overnight momentum or play momentum and breakouts in the ones thereafter. So it's paying attention to a lot of those nuances, paying attention to your P&L, paying attention to your daily and weekly reviews, and all that stuff together helps you just be more responsive.
Yeah, great point. I think Lance's point specifically to, like, if you've been in a groove catching trades and all of a sudden find that the trades aren't working quite as well, or you're starting to catch a little more heat on them, it's a sign you're possibly in the middle of a market turn or market shift, and that you need to kind of get ahead of that and review the trades a little more in depth. Next question here. When the daily chart presents a strong setup, but the intraday doesn't align, are you avoiding this trade entirely, or will you still take it with a stop at the high of day or low of day?
Yep. So this is a great question, and this is something that came up a bunch last year. I would argue, like if you were to take this TIGR back in October, so TIGR, this was an amazing, amazing, amazing uh, move on the daily. But I would argue that intraday on this October 7th of last year, this didn't set up that well intraday. So the question is, if you don't get the intraday set up, do you just not trade this? Do you just trade it from the daily perspective? And so here's what I do. I don't think this is the right answer. I'm just speaking about what's right for me. And so if I'm going to do an intraday trade, generally I need the intraday, definitely a really good intraday setup, but in the best setups, the intraday and the daily align. But when something like this TIGR, the intraday just doesn't set up that well, that's when one of two things I tend to do. Well, I guess one of three things. Like one, don't hesitate to not trade it. Like if it's not in your playbook and you don't have a way of capturing it, there is nothing wrong with just not trading it and just passing and folding the hand. So for a lot of traders, this didn't set up intraday for their playbook, so they passed. That's a totally acceptable option, and people do that probably too infrequently. They probably underestimate the benefit of just saying, hey, this didn't set up intraday for me, I'm just going to pass. The other thing that I tend to do, and this will come up in another question and more over time in videos, is this is something where I might be really interested in selling call options in something that's really blown out like this. Or as the question asker alluded to, I might be willing to just simply trade it as a daily trade on the daily chart. And so that's where once, if take something like we open at around 14, we had a little opening drive. Once we crack below 14 or so, I might be willing to short there and give it to a stop at daily highs, exactly as the question asker alluded to. So I think Tiger was a great example of this. I think MSTR had a solid intraday on that exhaustion gap day, but nevertheless, even if it didn't have a solid intraday, I absolutely still would have done that. So I think all three of those are very good options to tackle stuff like this.
Nice. And just let everybody know real quick again, we're covering questions that people submitted to the Ask Lance Anything channel in the community first, and then other questions we'll cover after. Next question here is, from what I observed, everyone is watching the same tickers in the same spots. On our time frame, no one is doing anything groundbreaking. The difference between those making money and those who aren't comes down to stronger systems and more experience. The best traders have refined their process to take full advantage of opportunities. This is almost the real edge. Curious to hear your thoughts. Have you noticed any other key differences between elite traders and those struggling?
Yep. And so I know who asked this question, and I would say this question shows a certain amount of bias that I don't think is accurate. I think for this specific trader, the people around him are doing the same things and looking at the same stuff, but I don't think that's a general truth at all. If I've learned anything, there's so many different strategies out there, and there's so many different ways to make money. And so, I mean, there's going to be people that are awesome at tariff headlines. There's going to be people that are awesome at earnings. There's going to be people that are awesome at quantitative backtesting. And so some people, their home runs are stuff I'm not even considering. That being said, I think it is true that most traders in the most extreme situations, most traders will generally gravitate to. Like I think most traders out there, and this is true for day traders and even large quantitative firms and large trading firms. Like when MSTR, a mega cap like this, is doing well, I don't think it's a mega cap, but a large cap co is doing a move like this and going nuts. Every pro trader in the world is probably keeping, at least one eye on this to some degree. But there's a lot of ways to attack these. So I would say like, yes, it's true that like, I think for many traders, they're probably trading MSTR, they're probably trading, SMCI, they're probably trading the Bitcoin breakout. So I think a lot of traders have a lot of commonalities, but I think you're asking that question with the bias of your own world around you. And I don't think that's overall accurate. There's a lot of people finding a lot of money in a lot of different places.
Yeah, great point, Lance. Next question we have here is regarding Playbook. It says, do you categorize setups per time frame, such as on the 1 minute chart, 15 minute, 1 hour, 4 hour, 12 hour? Do you only trade intraday scalps or swings during multiple days or over weeks as well? So a few questions there.
Yep. So I think the best way to categorize stuff is whatever is going to make sense to you. So there's some stuff I would categorize based on time frame. Like for example, in Evernote, I had a whole category that was just kind of daily breakout swings. So it would be stuff like this BTC breakout. But then I also had a playbook that was going to be IPO overnight momentum, or maybe just overnight strategies in general, or maybe it would be multi-leg on the daily reversals. So some stuff, like I definitely would categorize based on the time frame, but then other stuff I wouldn't. For example, if I can find an exhaustion gap, not an exhaustion gap, but I guess like if I can find a really good daily setup, like take this Tesla at 360, I might want to just categorize this as, kind of like a bouncy ball, inverse bouncy ball-esque kind of breakout. Sometimes I might just have a category where this is bouncy balls. And regardless of what category the trade is, whether it's intraday or daily, I'll still group those. So I don't think there's a right way. And I've done some by category of trade, some by time frame, and every mix. It's whatever makes sense for you to study it.
Very good. Moving on to the next question here. This is a question about scanning for big breakouts like BTC. I created a scan for things consolidating near a relative high doing good volume, but this is still too much noise. Wondering if you had any suggestions.
Yep. And so this is an important question. And so there's a lot of different scanning softwares out there. And this person's issue is, hey, I made a filter. It catches BTC, but it catches too much. And so much of scanning software, or even honestly filtering for news, filtering for anything becomes this process that you essentially forward test on, right? Or even back test. And so this person's saying, hey, this scanner that I made is too noisy. And so that's where you start to say, like, okay, what is it capturing that shouldn't be there? And so if I had a list of 20 tickers, what I would be doing is I would be typing up the tickers. And so maybe it's, Apple. And it's like, oh, wait, I don't like this setup because of A, B, and C. So then you're going to tweak that filter to remove A, B, and C. Then maybe you type up a ticker like Tesla, and you're like, oh, this isn't great because we're now below the moving average. This isn't a good setup because of that. So then what you do is you just keep on, like, so many of these filters that you end up using, it's like almost like the Frankenstein of filters, where over time you're just adapting, and you're adding more lines of code to remove what you don't want, but include what you do. So for example, I had filters, but then if a stock was stuck in a buyout, like, oh God, what was the ticker that got, let me see. Oh yeah, like this, this Nari. So this Nari is in a buyout with Striker. And so if you're looking for something that makes a big move, then consolidates super tight, it's like, oh wow, this ticker went from 50 to 80 and is consolidating in a 50-cent range. So of course, though, it's like, wait, how do I avoid this? And so you can start to add on lines of code that remove stuff like this, or you can have an excludes list where you exclude buyouts or something. So a lot of that is part of the beauty of the job, and just the kind of like Kaizen, like constant improvement of adapting these filters to whatever your needs are.
Nice. Next question here. I think this is a follow-up from the same person. It says, I'm working on categorizing playbook trades in a database. Let's say we're analyzing exhaustion gaps like SMCI and MSTR. Can we go through an example of how you might structure this in a database, including specific columns and tags?
Yeah, sure. And I think like, again, a lot is just going to be what's right for the user. So for me personally, there's not much, I mean, there's not that much difference to me based on whether something's an upside exhaustion gap or a downside exhaustion gap. So some people, I mean, of course, the downside is far safer. An exhaustion gap to the downside is far safer because of the lower bound of 0 versus the upside can go to infinity. So some people, they might want to differentiate between downside exhaustion gap and upside. So that's one decision the user needs to make. Which, do they care about that differentiation, or do they just want one huge database? Another thing might be, is there an intraday setup involved? So it might be exhaustion gap as one tag, then intraday setup as another, or no intraday setup as another. It could be exhaustion gap, then maybe you traded it using options, right? So SMCI, I traded it using options. So maybe you would also tag that as an options play. Or you could even be more specific. Maybe you were long options rather than selling premium. So you could tag that as long options. So a lot of these things, it's really dependent on like kind of what do you want to study and gain from it, and what analysis are you trying to do. For the most part, my Evernote databases aren't really like that crazy. Like if I was doing something like this would just be, daily exhaustion gap. And I want both the downside ones, I want the upside ones. And that's all I would need. Because for me and my purposes, when I reviewed, that's all I wanted to see. And I could just do any filtering from there. So for me, I mostly kept it pretty simple.
Yeah, and I would agree with Lance there, where simplicity is powerful, and the easier it is to kind of categorize something, the easier it is to search later, and the more you can get granular about what made that one better. So I think that's a great point. Next one here is, I had 4 in-place stocks on February 16th last Friday. I think that's actually supposed to be the 14th, February 14th last Friday. Roku, ABNB, SERV, and SAUN. Would you have traded any of these? Please explain why or why not. And let me know if you need me to call those out again, Lance.
No, I recall this question. Yeah. So, I mean, essentially the user's talking or the asker is talking about 2-14, which was last Friday, Valentine's Day. And so what this was NVIDIA had sold their stake in SOUN, SoundHound, SERV. And then if I'm not mistaken, Airbnb and Roku were earnings plays. So like for me, most earnings plays I don't particularly love unless there's a really good intraday setup. So like for me, Roku and Airbnb, I had no interest, whereas Sound and the SERV, I very much had interest. But like, again, it's not so much like there's so many traders out there that are amazing at trading, the day after earnings. So it's like you don't want to pigeonhole yourself based on what I do, because there's just so much more out there. But for me, like definitely, I'm interested in the SERV, and this SERV and the SoundHound. These are going to make it for sure into the February top ops, just because that was just such an awesome opportunity pre-market. So these, at least for me personally, which again should not be the answer for everyone, but at least for me, the Sound Hound and the Serve were super interesting.
Very good. Next question here. Said, you mentioned before you sell a lot of options. Can you give us some details around this strategy and how we can maybe start doing it ourselves?
Yep. So there's going to be a whole options section at some point. I've done some tweets on this before. So the first thing I'll say, options have a tremendous, especially if you're selling options, which is the question here, selling options are enormously risky, right? You can sell an option that you lose 1,000% on literally in a day. So the first thing I will say, options are insanely risky. Options are insanely complicated. like you should at least be well versed in the Greeks. If you don't know what the Greeks mean, well, guess what? Odds are you probably want to stay away from options. Essentially, options place another dimension, which is time. Not only do you need to be right in the direction or the non-direction, but also within a certain amount of time. So very, very complicated. My general rules for selling options, though, I tend to follow a couple things. First of all, I never ever want to sell an option before a move has really exploded and blown out. So I almost never want to sell an option in no man's land. So like, and I mean, these are rules of thumb. You got to be careful in general, but like anything in here, we're kind of in the middle of the range. This is where like, I don't want to sell too much at like, I don't want to sell too many calls at 14 because so easily that can just be back up at 20. I don't want to sell too many puts at 14 because so easily this could be back at 8. So the time is really when the pendulum is already blown out somewhere. So if you take this TIGR, like this TIGR, this already was a crazy move, then it epic blows out. Take like even Tesla last week. Like I don't want to sell puts in this range, right? Because if this range breaks, we can so quickly go from 380 to 320-ish. The time to sell puts, it's not 380, it's closer to 320, right? And so the first rule is you only want to sell options generally when the implied, and again, when I say rule, these are rules of thumb. I'm sure I sometimes break them, but like when implied volatility's already exploding. The other rule of thumb, I'm generally selling at a strike price and a premium where if I get exercised on it, I probably want it, right? So it's like, okay, if this range is 380 by call it 440-ish, like no, I don't really want to be long Tesla from 370 or something. That's just right where this is breaking down from. Like if we're in this range here, I might want some closer to 300, right? So that might mean waiting for this to blow out lower, then you can sell maybe a 310 for like $10 or something. So that's another factor. And then the timing, I'm only selling a strike where it's within a time range that I want that, right? So if I'm hoping this kind of capitulates down towards 300 this week, I'm not going to sell a January, 2027 put, right? Like I have no idea what Tesla's going to do between now and 2027. What I'm making a bet on is that if this goes from 380, I might want some at 300. So that might be why I sell a weekly. Then the final rule in combination of all of this is I am only selling an amount of options equivalent to the amount of shares I would actually want at that price. So let's say I want 100 shares at $300. That does not mean you sell 100 contracts, because if you sell 100 contracts, that means you are going to get way too many shares. One contract equals 100 shares. You sell 100 contracts, you are going to get 10,000 shares. So I am always only selling the amount of contracts that represents the number of shares I want. So in this example, I'm not selling puts in here because, it's just range bound. I want to wait for all of this to crack. But then if I want 1,000 shares at 300, I might sell a, 310 weekly for call it $10. And I might sell 10 of those if I want 1,000 shares. So all of those rules of thumb tend to keep you out of trouble. And a lot of times, if I get exercised on stock, I probably want it within that time frame. Again, options are dangerous, options are risky, but that is my TLDR of my general rules of thumb that I'm sure I definitely sometimes break in certain situations, but are beyond the scope of a quick answer.
Yeah, and as Lance said, there will be some videos in the course on options as well. Heading over to the next question we've got here, it says, in 2020, you wrote that you were working on improving your big picture trades and holding core size overnight to capture larger price movements. In hindsight, do you think it was worth holding core size overnight, or was it better for you to focus on capturing intraday legs instead?
The nice part too for all the longtime Patreon attendees is having a George here means my voice probably does like 75% the work, and I get water breaks when otherwise everyone just has to sit there watching me drink water. Um, but this was an
Yep.
interesting question. And so I think in some of the daily report cards I was talking about that I was trying to expand my time frame to some of the bigger picture stuff. Um, did I find that worth it, or should I have just spent more time focusing on the intraday legs? So it's interesting. I generally believe but the most edge is found intraday and on time frames that are shorter. So if you're an intraday trader, I think generally the most edge and certainly the least variance is when you're just simply sticking to that next highest probability leg. The further out in time, the more exposed you are to market movement, to news, to overnight risk, all that stuff. So at least from my time at Trillium, my time generally was best spent on focusing on that intraday leg. That being said, all the seeds I was planting back then, a lot of that actually ended up paying off very well for me in later stages when I was just trading independently on my own. Because sure enough, like once in my post Trillium world, a lot of what I did was bigger picture swing trading. And so everything I was working on very much carried over. So was it worth it at the time? Like no, just because that's not where my core competencies were at Trillium. That being said, it ended up working out extremely well for me long term.
Very nice. Um, let's see. Our next question we've got, Lance, is regarding breaking news. It says here that being early to news seems to be very challenging, at least to me, because what I would usually notice is that the volume would start to come in and the price already jumped for a couple of seconds before the news headline was even delivered. I wonder if that's because of my news source does not have low latency needed for some of these types of strategies. I'm using Benzinga Pro. I also wonder if the Bloomberg terminal delivers these types of news headlines with a much smaller latency, and if the early prints are all coming from people who have a low latency news source, such as the Bloomberg terminal, or is this mostly algorithms?
And so the answer is pretty much both, right? So like stuff, there's all sorts of different news sources, and I'll get into this at some point over time. But essentially, Benzinga is more of a squawk service. So any squawk service like Benzinga, Briefing, Trade the News, they're always going to be delayed. They're essentially just aggregating. And so like there's all sorts of things that create latency in the process. And as you can imagine with anything in markets, there are people that are just cold-blooded killers and that are focusing on that and trying to become as fast as possible and execute as quick and everything else. So 100%, yes, there's algorithms. Yes, there's automated trading. Yes, there's people that just have the fastest news sources and have optimized for latency. So yes to all of that, really. And I do suspect over time we're going to see more and more automation as we all get slowly or quickly replaced by robots. This might not even be the real Lance, but we will never know.
Yep, coming sooner than later, it looks like. Crazy to
Probably.
watch. Yeah, just, I mean, goodness. I think ChatGPT just got popular, what, a couple of years ago? Maybe even not that far, and how far it's come is
One
crazy.
fun fact, actually, which could be very interesting, on the endless laundry list of things to do for Magnum Opus, I would love to build a AI chatbot that's trained on all the material and have that for elite members. So I actually have started to research this. And it's on my list where like how cool would it be if you all can just ping a chatbot, hey, I'm interested in exhaustion gaps. I'm interested in bouncy ball trade. I'm interested in X, Y, and Z. And it just gives you a good answer as well as the references and resources on where to find more information on all that. So yeah, there is very possibly going to be the not even the second Lance B, but like the N to the infinity Lance B chatbots available in your browser. So yeah, that'd be cool.
Yeah, nice call, Alex. The second Lance B. Um, yeah, we'll see how many Lance Bs we can produce with AI here in the future. Uh, next question we've got here is in regards to the rate of change is everything video, how do you standardize the slope of bars on your chart? On both Thinkorswim and TradingView, the angle of a move changes drastically depending on how much you zoom in and out. I can change the angle of the same drop on the 2-minute chart from 20% to 70% just by zooming in and out.
Yep. Yeah. I
Um,
mean, I think this is like a valid question. And I think like with any chart, there just is kind of an appropriate aspect ratio. Like for example, like if I could have this main chart. I have too many tabs open that are gonna mess up. But like I could have this stretched to infinity left and right, and the slope is effectively then just gonna be zero. So I don't have the perfect answer other than like you want to just use a reasonable aspect ratio where you can at least tell slope. So most chart programs generally default to something that's pretty reasonable. So on something like this, like I can tell that a slope of 1 would be around here. This was at a higher slope, then we started to accelerate. So it's more so just sizing things towards kind of a default. Because yeah, of course, if you stretch anything any which way, it's not going to do that. But I think as long as you keep it consistent and are using something reasonable, like even if I were to change these proportions a little bit, it will still be consistent versus itself, right? So even if this slope was a little bit shallower, I'd still be able to see it increase here. So as long as you get a aspect ratio that is kind of showing these changes, it's you'll get used to whatever you're kind of using. I don't think there's like some perfect aspect ratio, but yeah, you definitely can't stretch it any too far any which way, or else you're going to lose all that depth.
yeah, agree with Lance about the consistency part. As you catalog your own charts, build your own playbook, you also kind of notice with whatever standard you normally use, how the slopes develop over time. Just real quick before I forget, I wanted to also mention that some of you had asked questions in the community channel that Lance did answer directly. So if you did drop questions in there that maybe we skipped over,
Yeah, somewhere
just
more appropriate to bang out a quick answer.
exactly. Next question here says, I've never used structured intraday technical setups. My approach has always been to trade based on bias alone, looking for lower highs and expecting an all-day trend. Often I'll trade a stock just because it's up 3 days in a row with decent volume and gapping up. I've spent thousands of hours refining this concept and trying to get rid of the subpar setups, finding the A+ versions of each, thinking it should work, but am I approaching it from the wrong angle?
So here's the cool thing about trading is like I know traders that don't really use technical analysis at all, and that's great. And so there's so many different ways to skin a cat and make money. And if you find something with edge, great. That being said, where I think sometimes you get the most edge and people find the most success is when you kind of combine these different disciplines of stock trading. So when you get someone with a lot of fundamental analysis understanding and they know, oh my god, this company's pure garbage, or this company is super dilutive, this company has a shelf, or oh wait, this company has this fundamental catalyst. Anytime you can combine knowledge or even say like back testing and data, so you can say, oh, hey, anytime Tesla has gone X percent in this many days and is this far from the moving average, it's going to be, more likely to retrace or something. But then what happens is if you can take that knowledge or that system and combine it with something like, oh, wait, I'm going to wait for the break of prior bar lows, then position. That's where you get really, really really cool combinations of trading is mixing the different disciplines. So this trader was saying, hey, I don't really use technical setups and I don't really analyze some of these nuances you're talking about. And guess what? If what you're doing works, awesome. But what I find is when you combine these skill sets and then start paying attention to more of these nuances. Oh, wait, I wasn't paying attention to volume. I should pay attention to volume on the breakout, or I should pay attention to volume on a capitulation, or I should pay attention to whether there's breaking news or not. When you start to combine all of that, that's when edge can be greatly, greatly, greatly magnified. And I've seen people with certain strategies like quantitative background or something else. And once you then like this person has okay edge, this person has okay edge. They get together with their skill sets, and it's like, oh my God, they combine the two, and it's super effective. So there's a lot of ways, but it's all compatible too.
Nice. Next one here. So Yash had a series of questions on reading the tape. Lance is going to answer the first one, but the rest is going to be covered in videos that are due in the coming months. It's a huge topic. Lance is going to have a lot of content on this, but we're just going to hit his first question here, which is, what is the significance of using MMID in the times and sales to interpret order flow? How can we use this to help pinpoint our entries?
Yep. So MMID, market maker ID, or I think just even more than beyond market maker, is just the exchange code, right? ARCA, EDGX, EDGE, whatever. And so what happens, not always, but a lot of times, not even all, not, let me rephrase that. Not definitely not always, not even a lot of times, but sometimes you can find order flow patterns in the venue. And that one buyer is using a certain venue, and that is often a tell. For example, last year in GameStop, I don't remember which day it was. I think it was this day going into July or June 7th. The after hours after the 6th, there was an ARCA buyer that was just massive size driving this thing up. Then pre-market, he just kind of collapsed. DXYZ, on this day here, I think on the top, this 11-11, there was, I don't remember what venue it was, but there was this lower high made where this stock cracked so hard, but then it was just one buyer that drove it back up, I think towards like 46, 47-ish. And once he was exhausted, it was just done and rolled back over. So it's just kind of a little layer of nuance you can get by observing some of that.
Very nice. Next question here. Someone said, I heard you mention in a video that you were a very active trader, trading up to 25 tickers in a day. They said maybe they heard that wrong, but they said, I hear all the time that there are really only a couple good setups every day, which is my experience for the most part as well. Am I missing something? Can you explain how you were so active?
Um, it's called gambling addiction. No, I'm just kidding. So it really depends the day, right? There are some days that are super slow. Maybe you're trading 5 to 10 tickers. There will be some days. I mean, I'm sure on my most active days, I might have been trading 40 to 60 tickers or something absurd. So the thing to keep in mind though is a lot of what I was trading, like the really good opportunities are far and few between. But, right, in theory, if anything has positive expected value, you should probably be placing some, if it's marginal, some small amount of bet on it. And so, yeah, in general, I'd be waiting for the really big opportunities. But if there is a place where I think, oh, I can make $500, I can make $1,000, I can make $2,000, I was still taking those trades for small size. So I would just say it's the equivalent of like, yes, I want to play and wait around for aces, kings, queens, but that doesn't mean I'm not gonna, limp into the pot with like a 10-7 on one hand or play a 10 jack or maybe I don't know, just some marginal hand, but it's slower and you're just trying to kind of get little singles to piece together a day. So yes, there were definitely days where I would do that. And there were also days where like, look, it's really active and there's a lot going on, especially depending the market. And so to trade 20 tickers is not necessarily all that crazy depending on the environment. But yes, that is accurate.
And we will be giving out a prize for most tickers traded in a day. So submit your verified trades.
Please don't do that.
Please
Please
don't.
don't do that.
You want to.
George, this is how you get us sued, man. Our prize is going to be like a Cracker Jacks toy, and like someone will lose like 10 grand trying to get it.
Don't blow up your account trying to trade 100 tickers tomorrow.
Yeah, John Watson hyper scalping. I like that. Yeah.
Next question here. While placing orders, do you type in your stops prior to placing the trade, right after placing the trade, or do you not use hard stops?
Yep. So, and I think this mostly mostly referred to stop orders specifically, as opposed to like, ooh, do I have a stop on the trade per se? So I find stop orders are super, super, super useful, both for getting in and out of positions, right? So let's say something has a very clear level at $5. Like I want to be the person that gets $5.01, not $5.10. So one thing that super shocked me is like so many people are so sloppy with their order entry, getting in and out of stocks. And trading is a game of thin margins, right? It's not as if it's just that easy. And so many people will just have sloppy order execution and they're giving up pennies on every single trade. And that stuff adds up over the course of a year. And I remember Brian Lee made an awesome presentation on hotkeys at Traders for a Cause. And then people were like, oh, I'm not a super scalper, just day trader. And it's like, what, dude? Like, it doesn't matter your time frame. If you're entering sloppily and giving a lot of slippage, that's just money you're losing over the course of a year. So yes, I use stops to enter and exit trades. Yes, a lot of times they're going to be faster. Like, look, maybe you're eating lunch, maybe you're doing whatever. You always, a lot of times, want to take advantage of those for certain situations.
Yeah, great point. I especially love the idea of using stops to enter trades, and is a good criteria to think about entries. Where would you stop out if you were on the other side? That's something that stuck with me for a long time. But next question here is, and actually, this is actually the last question we had in the channel. I have a few more that have been added. So I'll
Real
do
quick,
those too.
actually, George, let me just
Yeah.
touch on this with JP, what he just said in the chat.
Yeah.
Most of the times it just goes without filling stop limit orders. A lot of times it's so obvious level that it just sweeps through. So this is an important point. Like if you're using stops, you need to, and this is the other part where the order book and the level 2 box is so important. Like if you have a stop at 501, that's a limit to 503, $5.03. But if there's no liquidity there, you're not going to get anything. Or if there's 200 shares there, well, guess what? You better have the highest, fastest latency computer and internet connection, or that's going to be gone. And so a lot of times what happens is people aren't paying attention to their position size relative to what's on the order book. And so a lot of times you need to be paying attention. That's part of just paying attention to liquidity, the size, everything else. And so a lot of times what might happen is somebody wants 5,000 shares and there's a 5,000 share offer at $5.05. If you're queuing from 501 to 503 and there's nothing there, you're not going to get it. That's where you need to queue 501 to 505 to make sure that you get the liquidity that's there. So a lot of that is really learning how to use the order book, how to get a feel for position sizes and liquidity. And then keep in mind, it is a big market out there, right? Like if everybody and their high frequency trading grandma has a stop at the same price, like if your position's 50,000 shares and there's 50,000 shares between 501 and 510, like what's the probability that you on Wi-Fi in Nebraska is going to get 100% of that fill? Literally zero. You're not going to. So that stuff's super important to keep in mind. Do I think that a visual on order flow like Bookmap would be helpful? I mean, some people like that stuff. I've never found it necessary. I just did it the old fashioned way with my eyeballs. And I think Bookmap, it probably doesn't provide the level of granularity that I'd want anyways. So I think you just got to use your eyeballs the old fashioned way. But that's an important point. So sorry to interrupt you, Giorgio.
No worries. No worries. That was a great question. So last official question we had was, it says, you've mentioned you would be careful to short low floats. So what would you consider to be the minimum to be safe? I'm guessing they're talking about float there.
Yeah. So this is a great question regarding float. What is the minimum to be safe and not have kind of low float tail risk? My kind of non-answer is there isn't one. Like, I don't think there's some set answer, right? Like, look what GME did. This went to the moon in 2020. It squeezed again last year. The float on GME is enormous. AMC even magnitudes higher, and that still went up, 3x or something. multiples. Um, like I would say anything under a million is super dangerous. I would say anything under even a couple million is dangerous. Um, and also float isn't necessarily so perfect if a ton of that is locked up for whatever reason. So like especially in the past couple years, we've seen things like the ZJYL blow up. We've seen all those China stocks do those funky moves. So a lot of times you need to be really careful. Like you need to be careful. Is it a Chinese stock that's going to be gamed? Is it, are we in an environment where things are really squeezing and running hard? And in general, you just need to recognize that shorting carries just a ton of risk that didn't used to be there pre kind of like 2020, 2021, I would say. So I would just like, you got to be smart with some of these shorts, especially on the lower float stuff. And like, I think if you think, oh, anything above 1 million float is safe, I think you're being naive and you really need to just handicap that into your sizing. And there is no safe, perfectly safe thing, you know, like look what GME did a couple years ago.
Great point. I think we've all heard stories, like Lance said, the last 2, 3 years about people getting burned shorting low floats. I mean, it's become a theme in a way. So definitely something to be considerate about. And now I'm going to go into questions. Lance, what do you think about this? We had people drop questions in the chat. I was just going to go through those now, and then we can do raise hands. Um,
Let's just take through the chat and we'll burn through those
okay.
and see if we can, you know, and feel free if you want to ask something, you know, just doing the whole hand raise via Zoom, when we can take some of that stuff that way. But yeah, even dropping in the chat is easy too. So yeah, I mean, George, let's
Yeah.
go start from the chat and take it from there.
Okay. So first one was, hey, Lance. And again, some of these might not be that doable, but it said, hey, Lance, what do you think about the overall market condition as of now? Also, what is your prediction assumption for the coming months?
Yeah, I mean, so this is an important question in some ways. So like, do I think so far, like things are probably a bit slower versus 2024. There's still been some really good, and that's kind of what my next video is going to be on as far as the monthly top ops. Like so far this year, the big theme has been what I would call thesis breaking headlines. Um, and like I'll probably talk about that in the next video, but like the biggest trades this year were headlines. You know, Jensen Huang on the quantum thesis breaker. Hey, this isn't going to be relevant for 20, 30 years. You then had DeepSeek crush the AI theme, which, you know, a lot of these have kind of recovered. But then you then had the NVIDIA selling the serve and the SOUN as kind of the thesis breaker. You know, that's the whole reason why these were up. So that's what I think has been a decent theme so far this year. I think, you know, the tariffs are always worth watching. I think M&A, again, that's been my prediction, will pick up over the next year or two. But beyond that, like I don't find much, and this came up on one of the S&B calls. I don't find much value in making predictions and assumptions for the coming months. Like anyone that thinks they know what's going to happen in the market, it's all bullshit. Like nobody has a clue. Like it drives me nuts when people have predictions because the world is so probabilistic, right? Imagine someone that was like, "Oh, it's you know, imagine it's January 2020. Oh, you know, I'm 80% chance the market goes up 7% this year." It's like, dude, like what value is that? Like the craziest, you know, the world changes so much every day. So it's less important to have predictions and assumptions and more so just to adapt to what's in front of you. So the way more important thing is just to be like what has been in play, what has been working, what hasn't, rather than to try and predict in like nobody knows what's going to be the big themes this year. You know, like no one was able to say, oh, CPI is going to be the big theme in 22, or hey, guess what? Silicon Valley Bank is going to collapse and, you know, threaten the part of the financial system and the market with it. No one sees most of the stuff that ends up relevant coming anyways. So who knows if DeepSeek is about to change anything? Who knows if it's going to change nothing? No, nobody knows. So I don't bother too much thinking that way.
Yeah, and to Lance's point too, often those biases of thinking interfere with actually reading what's happening. So
100%. Yep. Most people, the biases hurt them, and yeah, it's so rare that it actually helps you.
yeah. Next one we've got here. How do you find themes? This kind of ties into what we just talked about. How do you find themes that will be in play? Do you look at specific ETFs? Um,
So, I mean, I'd say there's two ways. Like, there's people that have an exceptional talent for having a feel as far as what's going to come into play next. So I do think there's people where when AI was hot, they're like, oh man, like, okay, power generation and nuclear is going to be huge. Quantum could catch a bid. So I think there's people that are super smart um, in that sense. I was never so great at that. I think it's a different skill set that can be trained, but I never did much of it. So for me, a lot is just observing, like what were the best plays, and the daily observations and write up, the weekly write up, speaking to other traders. So like I'm always also paying attention to different like market levels. Like, okay, guess what? You know, I know Q's made highs today, essentially. Um, I'm always paying attention to stuff like that. But for the most part, it's just observing. Like right now, I'm also aware that like a lot of the craziest stuff is kind of actually collapsed, right? The quantum names are super mid-range. Stuff like Sound and Serve just got taken to the cleaners. So I'm always paying attention to like what's working and what's not.
yeah, good point. I think, like Lance said, finding your groove in terms of what to pay attention to is also important and what plays work for you. Um, so that's where the playbook and cataloging your own trades is so important. Next question here says, I know at times you mentioned using a proven wrong stop on names you have a bigger view on. So wondering if KITT on Jan 6 might fall into that category.
Let me see if I can find this question real quick. Do you know what time that was, George?
Oh, sorry, just looking for this now.
You said what? It was KITT?
KITT, yeah.
I don't see that one. That might have just been directed towards you, maybe?
Oh, yeah, it was just, sorry. It was Rajan sent it directly to me.
Mm-hmm. Can you repeat that again?
So it says, I know at times you mentioned using a proven wrong stop on names you have a bigger view on. So wondering if KITT on Jan 6 might fall into that category.
Um, I mean, I guess, Rajan, like that's a little bit too vague for me. Like, I don't know what you're hypothesizing to begin with.
Yeah, we'll
Yeah.
see.
Um, did I unmute you? Let me see.
Hey,
There.
can I unmute? Yeah.
Yeah.
Can you hear me?
Yep.
Okay, perfect. Yeah, so the proven wrong stop, I read that in one of the old DRCs, and that was when you had a bigger picture view on, I think it was the indices, I think on a panic day.
Mm-hmm.
So in terms of like the intraday action on KITT on the gap up there, wondering if that might apply because I don't think the intraday set up so well.
But and so you're thinking short, essentially, you mean, right?
Yeah, yeah.
So let's see. Let's see what I can pull up here. Put this there. It's the 1-6. And so you're saying essentially shorting somewhere in here and just giving it to highs, essentially? Oh, you might be remuted, but I'll just let me see, did that work?
Yeah, or even in the pre-market, like maybe shorting some type of breakdown, just risking potentially wide.
Yeah, so I mean, with something like that, it's just like it's one of those things where it's for the most part, I tend to find that my best trades have a clear intraday setup. Will there be times where I'm like, okay, like maybe I short here and give it to highs or something? Sure. But I find often when I tend to need to give that looser stop or do stuff like that, I often need to size way down. The best trades for me, it's very clear setup, aligns a multiple time frame. That's when I really size up. So yeah, I'm not opposed to doing stuff like that. This actually kind of happened. This kind of happened in DJT around the election. Oh yeah, it was this day on ahead of the election where there wasn't any really great intraday setup, but it was something where I'm like, oh man, this is a really huge move. And I felt like probability wise, it probably collapses. So I'm not opposed to doing stuff like that, but generally I'm not sizing up too much on it, to be honest. It's definitely not where my best trades tend to come from.
Okay, got it. Thank you.
Yep.
All right. Yeah. Thanks, Rajan. Next question here says, how many strategies should one have in total? Do you expect trading almost all setups every day? Is there a plan, Lance, for you to hand over 2 to 3 trading strategies to someone that someone can execute exactly end-to-end trading from a scanner? So sorry, that's a few things in one, Lance. Let me know if you want me to repeat that.
Yeah, what was the first part again?
So first part was, how many strategies should one have in total?
Yeah. So there's not going to be any right answer to this, right? So like the more strategies you have, the more diversified your income's going to be. So like for me, I always wanted to be a trader where no matter the market, I wanted to make money. Especially the younger you are there's so many times where if you don't have a ton of savings, your playbook could be totally cold for like a year or two. Like if you're really into IPOs, there's years where you don't get many hot IPOs. If you're really into low float gappers, there's times where that doesn't really happen a ton of. Yes, it's been prevalent recently, but there's definitely like most recent modern traders, they don't realize just how slow it can be because it hasn't been slow for a while. You know, I think 2022 was slow, but 2023 and certainly not 2024. So the more diverse, just it helps you lower your variance just as a earner. That being said, there's traders out there where they're just insanely good at one playbook and they do more of like the Bruce Lee, fear not someone that's done 10,000 punches, fear the person that's done 10,000 times. And so there's people out there. I mean, and I think like Qualamagi does like quite a lot of this where he's got his kind of couple different plays, but when he does them, he goes super hard on the best ones. So I don't think there's one right answer. It's what's right for you. But for me, it was like anytime there was a slow period, I was always finding new ways and expanding my playbook, just so I would have lower variance.
Nice. I think great answer to that question. There was a couple follow-ups in that one too that I think are quick ones. It said, do you expect to trade almost all setups every day? And then is there a plan, Lance, for you to hand over 2 to 3 trading strategies that someone new could execute exactly end to end from trading from a scanner?
So I mean, I think like really what most people do, it's some strategies work in certain markets and some don't. So you're really just picking like, okay, like in this type of market, this is the stuff that's working. This is what I'm seeing. So that's what I'm going to do. Right. Like, so last year was super, super bullish, almost euphorically so. So you got some of those euphoric upside exhaustion gaps. We didn't get many, downside panic exhaustion gaps because it wasn't the market for that. So I think you're mostly playing to the market in the context of what's working. So I mean, I will do some playbook strategies and put those out there over time, but like, do I think there's anything as far as like, oh my God, this is, you just input it into a scanner and then can easily execute? No, because a lot of the stuff is nuanced. So much of really and this is the most important part, right? Like a lot of people out there are like, ooh, I want to follow the live trading person so then I can just pretty much piggyback the trades. And it's like you don't learn that way. The more important thing is like, what are the concepts of why I do what I do, and why does this logic work, and how do you then build your own style? We don't need 3,000 lances all doing the same thing, right? And if anything was easily automated, I would just automate it. So much is the nuances around these and your own interpretation, what makes a setup good, and applying it in real time. That's the beauty of day trading, essentially.
Well said. Next question we have here is, Lance, how do I know that I'm not being fooled by randomness as I touch on multiple things like options, low floats, and all with no real playbook? Yet with a 2 week green streak in my trading, I don't know how to feel. So this is a little bit of a tricky question.
I think one of the most
Generally.
important things is, one, a playbook allows you to better judge whether you're doing something that makes sense versus just randomness. But then ultimately, in any form of trading, the ultimate arbiter equals time plus P&L. And so if what you're doing is just randomness, it's not going to last over more data points. And I think certainly as you get 50 plus data points, 100 plus data points, a month of trading data, 2 months of trading data, there's no hiding from the market. Unless you're doing something that's just like a fat tail strategy where you can hide risk. So if I'm selling way out of the money options and it's like, ooh, I made $200 today. I made $200 today. That's going to work for a while until then you lose, $4,000 in one day. So a lot depends the strategy. A lot depends. Part of the benefit of a playbook is you're able to objectively judge, am I doing what I'm supposed to be doing that makes sense per my system and my data? But then guess what? If what you're doing has no edge and is randomness, time will catch up with you, because in the long run, nobody can escape the just statistical prevalence of data at the end of the day.
Yeah. And just to Lance's point, like, if you've only been trading for a couple of weeks or just starting to chart, collect data for that long, you got to have that long picture view of, building that playbook now is going to give you so much value in 1 month, 3 months, 6 months, a year, 2 years. Like
Yeah.
it's something you just have to do.
Building the process right is going to be far more valuable than like, ooh, I'm, making small amounts of money. It's so much better to build a foundation for the long term, for sure.
Yeah. Next question is, were the recent DXYZ and RGTI daily support breaks good analogies to ARM? Were these good setups that didn't work, or is there some nuance I'm missing?
Now this is a great question. Who asked that, George? I don't have the chat open. Oh,
Let's
Raja again.
see. Raja, nice.
Let's see. My question for you is, what do you think are the differences or what's missing? And so what Rajan's referencing is this, sorry, I've got all these windows open. That makes it so hard right now for me to do this. What Rajan's referencing is this breakdown here. So this is going to be a fun interactive thing, because now we get to just pick on someone live. So Rajan, hit me. Like, what do you think are the nuances?
I hope I do a good job.
You better,
so-
Rajan.
So I think all three of them, something that they have in common is like a fundamental gravity to them, where they're potentially like overvalued from that perspective. I think some differences are on DXYZ. I don't think the volume was super great, especially on the breakdown day. And you can really see that on the intraday, the day it broke down. But RGTI and ARM, I think, did have better volume on those days. But in terms of just like the technical support breaks, I do think they all look pretty similar. Except I think DXYZ didn't really capitulate, whereas RGTI and ARM did. So yeah, and I'm happy to elaborate if we need to.
Does anybody want to be brave and add any thoughts before we, bully Rajan and make fun of it? Okay, cool. No, so this is good. And I love doing stuff like this. And so your question is super, super good. And it's actually not too different from a question I got from one of the SMB guys on Tesla, where he was considering this kind of like 375-ish break. So I love these questions because it's so important to build a framework for comparing different charts. Because so often I'll be like, oh, chart ABC is like DEF. And then someone will be like, oh, is this just like a 2? And I'm just like, I mean, yeah, if I squint and like cover my eyes and stuff. And it's like so many nuances, and building this lens for viewing price action is so important. So let's take this ARM. So ARM had earnings, and then it was just earnings day one. This was when the semis were super hot, but then we kind of had this like mega capitulatory bar, right? Like super, super high volume. This was 2 days after the earnings, and it went up like 30%, massive blow off top. And so then we consolidated. Like if I view this as the overall move, this is still probably definitely in the upper half, but of this overall range, we're even towards maybe like the upper third. The other thing that's interesting is when we get below this range, we only had a couple days of like, there's a lot of air below this in that we weren't really trading or consolidating. So if I then were to take DXYZ, so some of the cons of the DXYZ is we didn't really quite have some mega capitulatory move or any blow off. Then the other thing too is we also spent a fair amount of time consolidating in this range. One of the aspects that I do like though is if this is the breakout at around $50 here, we're at least breaking below that range. So this came up with the SMB trader with Tesla, and my qualm with shorting 375 or so, not that I thought it was so bad, but Tesla didn't really capitulate. Then part of the issue with the Tesla though is our breakout area is right around like 360. So there's a lot of people that might be wanting to buy this break of resistance that then can become support. Sure enough, we did end up breaking, below the 360 and we melted. So DXYZ, like the other thing too is I would say like this broke below 50, this bar here, then we rejected super hard, and that's a very strong bounce. So one of the things I don't like is how strong this bounce was ahead of that break. And because you were talking this day, right? I assume, am I getting
Yeah,
that right?
yep.
Yep. So overall, like I get what you're saying, and I don't think it's like the worst thing in the world, but a lot of those nuances matter. And generally, I want a lot of these things, to line up. Then the other was what day for RGTI? Like this day?
Yep.
So now part of the problem with RGTI is like overall we're in the middle of the range, I would say, right, of this overall move. And so like yeah, I don't necessarily mind this, like especially because this is kind of a nice rollover. It's kind of a clear level. But part of the problem with this is like we're kind of already at the total midpoint of the range. So it doesn't surprise me that we didn't kind of, I guess my point is when we're already in the middle of the range, I don't know if I saw this going like, oh my God, we're breaking to $6 or $8. In general, I would expect volatility to kind of contract on some of this. Whereas like, again, with that ARM, part of the beauty of the ARM that differs from the DXYZ and the RGTI is we essentially kind of went from down here all the way up there, capitulated, stayed in the upper kind of third or so, at least the upper half. So there was a lot of room to go. It's like, uh-oh, look out below. This has a ton of room to fall. Where with the RGTI, like it would have been much cooler if all of this was shifted up, way up towards there. So that's how I kind of think about some of this stuff. So I don't necessarily mind either, but I think those nuances are important.
So just a quick question about that. We didn't touch on the volume. Does the volume really matter? Because RGTI was doing a lot more volume than the other ones. during the consolidation,
I
like
mean,
towards the breakdown. Yeah.
the volume definitely does matter in the sense that, like, what I would really want to see is like, I mean, yeah, the more volume on any break is the better. And this wasn't also that long of a range. So I'd say like the lack of any like awesome volume, also isn't so super appealing to me. Um, so like I'm definitely paying attention to the volume. But another thing that I want to see is like if if I would want to see like, oh my God, we have a super tight range and we're doing a ton and ton and ton of volume. So then when we break, they're all out of the money. Where for the most part too, like, we super hard capitulated. Like these were some of the higher volumes, and a lot of that volume is still in the money in this range. So that's why I do think it's kind of likely we stay in just the no man's land in the middle.
Got it. Thank you.
Yep.
Yeah, it was a great breakdown. Almost makes it clear, Lance, of what's like one of the best trades of the year versus maybe a good trade for a month. Like there's those differences with that arm
Yeah.
trade versus those other two.
Yeah, and I'd say for a lot of stuff, like it's just about tempering expectations too, where it's like I'm not necessarily so opposed towards any of those, but it's just really going to affect my sizing, where it's very much like, okay, I might just be trying to scalp a little single there, as opposed to like, oh my God, this thing could just melt. So those are some of the differences.
Very good. Next question here. It says, let me read this one. It says, Lance, I do not know if it's because I've been following you and studying you for a long time now, but I'm feeling really comfortable being extra selective and hitting hard on the best A+ opportunities on different playbooks, mostly mean reversion and trend continuations. What insight/advice would you give me as the GOAT of the area for following the big hitter path like you to find success in that particular trading profile/style?
Yep. Counterintuitively, my advice is going to be far more gradual than you think. Most people try and grow too fast. I don't know your experience level. I don't know how many drawdowns you've been through. But as you start to skew your risk, that of course means that if some of those bigger trades go wrong, if you don't have the supporting playbook, you can definitely encounter drawdowns. So a lot of my home run style, I mean, I was always focused on that, but it wasn't really perfected until like it took so many years. And so like, yes, exponential bet sizing is awesome and all this other stuff, but my advice is to just grow gradually. And especially as you start to toy with some of that stuff, don't most people underestimate how fast they can grow by doing so gradually, and most people overestimate how fast they're going to grow by doing less gradual. Because what so often happens is I'll work with these traders and they're like, oh, my big goal is to increase my size. And rather than going from 1x to 1.1x, they go to 1.5x, they take a big loss, and then they're gun shy and their psychology is messed up. And like essentially they took one step forward, then they take two steps back, rather than just taking half step, half step, half step, half step. And just most traders are not experienced enough to deal with a lot of these drawdowns and psychology. So much, especially if you're a younger trader, so much is just keeping the feedback loop going, not taking major flesh wounds that, then you're miserable, you lost your motivation, it affects your psychology. My general rule of thumb is you never want to bet so much that if it doesn't work out, it's going to impact your psychology. And I think that's a pretty good rule, and most people don't do good following it.
It's a great point. And I think, yeah, that alone could save many trading careers without question. Next one we've got here. So this was a follow-up to the news latency question. Bloomberg/Benzinga says, as retail traders, is low latency news source necessary for breaking news plays? And if so, what are some of the low latency news sources you recommend? So asking for a little more info on that.
Well, I mean, I think a lot depends how you plan on attacking some of this stuff. Like for many styles of trading, like if you use some of the squawks, that's totally fine. If you want to compete on the fastest side, then you do need the direct news sources. I do think I have a video coming out that kind of breaks down the different news sources. But for the fastest latency stuff, you'll need the direct news source, the Bloombergs, the Reuters, the Dow Jones, the news watches, the press release, APIs and all that. So it really depends how the person wants to go about attacking that stuff. Certainly trying to be first is very hard, very competitive, and pretty damn saturated, especially with where the algos tend to be going and everything else, and AI. So it really depends how someone wants to address that. And also, of course, the costs. Bloomberg, I mean, I think Bloomberg is up to like 2,400 a month on a 2-year contract. That's a lot of moolah for most people. So I think it's really weighing those pros and cons and whether the ROI is right for the person. And most of this stuff, there's kind of a large learning curve and tuition to pay with some of this.
Yeah, great point. Again, I would also throw in the pods piece there to Lance's point too. Like, if you have a good pod, you can all kind of go in on some of this stuff, share scanners, share news sources, and also be the scanner for each other. So,
Yep.
nice little point there. Next question we've got. How many ES or futures traders have you converted to stock traders? Recall you saying that a while ago, and they said, I'm here to learn to trade stocks and expand my overall market knowledge since my primary focus is currently on ES only.
Yeah, I mean, I've converted quite a bit. Is the short answer. Some were close friends of mine, some were just from all over the internet, but I've I've not really encountered anyone, at least no one that's vocalized it to me. I've not encountered anyone that has regretted making the jump. Because here's the reality is like if you have Edge or a playbook in ES futures or whatever, the S&P, a lot of time that playbook works and applies to anything. And so for a lot of people, it's like, oh wait, wow, I've been blind my whole life. Like stocks are providing more opportunities, larger ranges. And of course, stocks do moves far crazier with far more news catalysts and everything else than just ES, right? Like, so I think most people that pigeonhole themselves into that, I've only spoken to happy people, which is kind of impressive because knowing the internet, I feel like if anyone out there was unhappy, they would probably call me derogatory slurs and tell me, and I would need to block them, which has not happened. So, I mean, interpret that as you will. But I've mostly heard good things and converted a lot of people.
Yeah, I'll attest to that too. Lance is much kind of, and I will say this, Lance is one of the only people that kind of puts out controversial content in the trading world, questioning some of the norms. And of course he gets some haters out there, but a lot of people just recognize it as fact too. So good
I mean,
question,
so
and we know
one
that's
of my
relevant.
best friends was a futures trader for a long time, and I converted him, and he was already a skilled trader. So yeah, it happens.
Yep, great question. Um, Next question here, and this is about today. They said PLTR today had an epic 5-minute drop with prior bar highs largely holding. I went short off the 2-min confirmed downtrend.
Oh, George, this was posted. Like the granularity of this is pretty hard for me to tackle on something like this, to be honest. So I'm sorry,
Gotcha.
SoTalk, but like
Just too
like
specific.
this would just require such a conversation. And the idea of using calls, like it's really tough to answer in this format, something that nuanced. So that I mean, maybe if we have time at the end, I'll touch that, but it's going to be really intensive for me to address that right now.
Yeah, very specific, detailed question about a specific trade. Next question here we've got is with the gap up open, wait, let me see this. I'm not sure what
That was
this
still
one.
the same part. Yeah, it goes down.
Okay. It was a follow-up. Got you. Okay. All right. Next one here. Hey, Lance, could you please touch on thin and spready versus thick and heavy order book flow, please?
Yeah, I mean, I don't quite know what they're getting at, but I guess, what does thin and spready mean? So the spread is just simply the distance between the bid and offer. If something is spready, it might be 0.05 by 0.20 or something, depending on the price. And by thin, it's just there's not a lot of bids and offers. So, if something is very thick, if I try and buy 50,000 shares at $1, I'm going to get $1 or $1.01. If something is very thin and spready, if I try and buy 50,000 shares, I'm going to get $1.20, $1.25, $1.30, $1.35. So generally anything that's a very thick order book, it's just a lot of bids and offers, a lot of liquidity. And of course, then the cost to trade is cheaper as far as spread and getting in and out of the stock. So in general, it's almost always favorable to have a thick order book rather than thin. Except, right, if I'm long something, I want the offers to be very thin because I could throw up, there's times in thin stocks where if there's only 1,000 shares on the offer for pretty far, I can throw up an offer, and if somebody accidentally pays 2,000 shares, I can get filled way higher up. So yeah, hope that kind of helps.
All right. Next question here. This one says, on a trade which presents multiple little base breaks intraday following an OR break,
Opening
how
range,
do
I assume.
how do you vary your risk with add entries around a core position as price gets extended? For example, AIFF on 211.
Let's see. AIFF. Um, 211. It's the right day. I mean, I assume. I mean, some of this stuff is hard, guys, with these specifics because it's like, oops. Like, are we? I assume we're talking long here. So on a trade which presents multiple little base breaks intraday, following an opening range break, how do you vary your core risk with add entries around a core position as price gets extended, for example, on I mean, the truth is like a lot of these range breaks, I'm just not buying at all. Most of these aren't quite clean enough. And again, it's, this is so dependent because I mean, what I do like about this is that this was a big breakout on the daily. So like, I mean, maybe I'm holding a core above $6 because of that daily chart. But a lot of those range breaks, I'm not necessarily buying. If I can get back here. Because like, am I necessarily buying that? Not necessarily. Am I buying that? Not necessarily. So this is where it's like, look, like for some stuff, it's more so like, what's the, I can't, I don't know what your stop is. I don't know, yeah, your strategy for some of this stuff. But what I would say is if I am holding a core, like certainly, so you always want a reason to sell, right? Like why am I selling? And then it's also how do you define getting overextended? So for me, for a lot of this, like let's say I buy above $6 as a daily breakout, and I'm giving it to the intraday low. For something like that, I might just be pure swing trading it unless we capitulate to the upside. In which certainly going from 8.5 to 11.5 or so, pretty damn quick. Like maybe I am taking some of that off. So as a general rule, like if I'm swing trading this, I'm either going to give it to the lows of the day Or the one exception is if we capitulate and get overextended, which here we certainly do. So here, if I think the odds of us retracing are extremely, extremely high, because we're getting so overextended, I might be willing to sell with the intent of buying back. Yeah, so again, it's like I personally wouldn't be necessarily adding on every single range break. I don't know. Are you adding there? Then if so, what's your stop? Are you adding here? Are you adding there? I don't know. So that stuff makes it a little hard, but that's generally how I think about that.
Yeah, and I think that's good pointing out that $6 daily level, Lance, is kind of like the key pivot point for that break too, and then low of day as a stop. So I think some good guidance on that.
Yep.
Next one here. Thoughts on GRAL from today? Would you mind getting short before it breaks lows? What grade would you give this trade?
God, yeah. I mean, this was well, so let me see this thing. So, I mean, I'm assuming, I don't know, Guri, are you referencing prior bar lows on the daily? Or are you referencing intra-bar lows? So that's my first question. So in general, like if I'm trading this as a daily chart, technically for this to be the break of trend on the daily chart, I would need this to break those lows, or I need to, this to capitulate higher intraday. So this move was pretty damn solid, but maybe like nothing so like I don't know if I love this enough intraday here. Then we do go to highs. But what I would say is interesting is like when we crack this hard from 64 down to 58, this area here, then that rollover is a potential spot. Then the place that potentially confirm and add intraday is this here. And what I really love is we break below lows and then we consolidate. So I think this plays pretty damn interesting to me. What I would say is where we do break 48, at this point, like the intraday isn't so great and we've covered so much ground. Like we've already covered 16 points. So like I'm actually not going to short at the break of daily bar lows just because just because it's already traveled 16 points. So I don't know whether you were referencing the intraday lows or the daily bar lows, but I actually do find this, given the range and given the daily chart and how hard this cracks, I do find a lot of this intrabar stuff very, very enticing to play. Whether it's, shorting this pop, adding on the break, or then just waiting for the break of lows overall. We get a tight consolidation. This almost reminds me of at least some of these breakdowns here. It almost reminds me of MSTR the day it had the Carousel. But so long story short, if you were referencing what I mind getting short before it breaks, intraday lows, yes, I'm pretty interested in that. What grade would I give this? And again, I don't mean I'm not shorting 48. That's just too far. What grade would I give this? I mean, the daily chart's pretty badass on this thing. That's a pretty damn big move. So if I had to pick a grade, I mean, so this bar I don't love. Like I would say the daily chart is maybe a B plus. And maybe I'd give the intraday I definitely find pretty interesting, but not super amazing either. I mean, maybe they're both a B plus to me. Maybe the intraday, yeah, they're probably both like a BB plus. Certainly interested, but not probably going nuts.
Yeah, look at that negative slope on that thing. Kind of after
Yeah, the
initial
other
breakdown.
thing, yeah, I mean, to that point, like, I mean, this held, like, once this cracked, this held that moving average so perfect. And so there's definitely times where it's like, we're not hardcore trending. So 2-minute prior bar highs, it's not appropriate because we're not trending, super hard. And that's where it's like, I'm not opposed to, once this moving average proves relevant, it's not a bad place to then, take that. cover there.
Yeah, that's great. Um, super. I always find those hard to trade too when there's like that consistent trend, but the candles are all so tight
Oh, it is. Yeah. And
and you're
well,
just
some of this
holding and
is meaningful.
watching.
Totally. Yeah. I find it. And so honestly, I was never good at holding big size on stuff like this. But what I was okay at is just like, I mean, I would do, because the wider your stop, the more variance you then have. So I was never able to just like hold size for something like this specific pattern. But what I would work on over time is just like, can I just hold a small core? Like bigger picture like that. And I think on some of the more exhaustiony-esque plays, you can really bank holding a small core on stuff like MSTR, to just a bigger picture stop.
Yeah. Yeah, great chart to look at there.
One other
Um,
quick thing I would say too is, let's say this was just consolidating across. If this was consolidating across and broke the moving average, I don't feel any need to cover that. Like if I'm short here and we break the moving average, I'm still probably just giving it to like 54 or something. Because if it just breaks because we're going flat, I don't view that as like some big emotional, level break.
yeah. Um, yeah, great one there. Next question we've got here is in the playbooks category, which is empty at the moment.
Mhm.
Um, will you be posting clear criteria setups that are easy to follow, at least for the best layup trades? So far, the videos posted do not have clear criteria for entries, exit, and it feels like it's more of an art. Um, so yeah, I think Lance, I think you've talked a little bit about that already.
Yeah, I mean,
Um,
it's like, so yes, like for example, I'm going to talk about the bouncy ball trade, which I've highlighted before. I'm not going to be able to pull up that intraday super easy, but there's stuff like the bouncy ball trade. Well, I mean, and what I would also say is if you're looking for clear entries and exits and some of those rules, just watch the top ops dissected videos. Like as far as what's available now, I probably have like 15. I don't know. I mean, it's probably at least 12 to 15 plus of those top ops dissected. And that's where I'm already talking about clear entries and exits on these trades. So that is going to be the best, fastest route. Yes, on some of these playbook trades that are going to be built out. If I take the bouncy ball trade, it talks about yes. If this is support, lower highs, lower highs, lower highs. That break of support is the entry. Use prior trailing bar, prior bar highs. So I do get into that and we'll get into that. But if you're looking for that, just jump to the top ops dissected and you're going to get it a hell of a lot quicker.
yeah, quick follow-up, Lance. Rajan just asked while we're on this GRAL chart, if you were shorting the break below 57, would you be risking prior bar highs or the lower high? So a little nuanced
Yeah.
question
So
about that
yeah,
short.
that's a great question. So this is something where I'd way rather be looser and give to the ranges and give like to something there. Or if I really want, depending how much I love the daily, I don't super love this daily. If I super love the daily, if I'm shorting here, I might just want to even give to highs. I don't quite have the conviction on this to do that. But yeah, I think it's when you don't have an amazing intraday, I think it's far more reasonable to short this and give it to the range when you don't have the really clean intraday. If you don't have a clean amazing intraday, it's less reasonable to expect a clean amazing leg. So I do find that as these as intraday quality decreases, you do, if you're going to take the play, need to be a little bit more looser, which then of course hurts the overall expected value, which makes these, not an A plus or an A or whatever.
Yeah, great point. Um, next question we have, this is regarding today. They said, how much weight, and this is a little open-ended, but how much weight do you put on the price action 10 minutes before the close? What are your thoughts on how strong the market, I'm guessing SPY, closed today? What would your thesis be?
Yeah, I mean, most stuff, let's see, where are we talking about this? So, I mean, this essentially, I mean, a lot of this stuff just happens from just closing imbalances. And like depending the setup, like something like SPY, I'm just not going to overly interpret that. Like the SPY generally and most of the market is just so efficient because like if this wasn't very efficient, you could just get so much size. So it's like if we're talking something like a hot IPO, if this was a hot IPO, and we had some really nice consolidation, like a lot of hot IPOs that consolidate well. If this was some consolidation at highs and we broke out, I would be just long out of my teeth because so often those hot IPOs can then trend really well into the close, then overnight. But for something like the ES, like I just have no major interest or view on it at all and don't think much of it. And a lot of times, stuff like this tends to just be, imbalances on some of this.
Yeah, and I'll agree too. And you also see that with earnings season. People not buying the stock but buying SPY on those closes. So yeah, those are tough. I know a lot of guys who trade just ES and will say, yeah, close is one of the hardest things to trade on that because you're just not sure what's causing that action.
Yeah.
Next question here we have is, for the best intraday opportunities, what's the percentage of them happening within the first 1.5 hours after market open versus the rest of the day? I'm asking because I'm trading part-time and only have that time slot available for trading, plus some pre-market analysis for about 45 minutes.
Yeah, I mean, certainly I think the open is still one of the best times. Like I mean, I don't have some perfect percentage, obviously, because of course it still just matters your playbook. Like, so take something like breaking news. Breaking news tends to not gravitate around the open. A lot of that just tends to be midday or whenever. But if you were to take the stuff like, I don't know, SMCI exhaustion gap, MSTR exhaustion gap, if you were to take some of the action in GME last year, a lot of that stuff has been off the open. Even Nvidia had some nice kind of just rollover exhaustion-esque moves. So if you're talking about some of those plays, I think your odds are pretty good for stuff like that. If you're taking some of the more bouncy ball type trades that I talk about, like, well, guess what? By definition, that needs to consolidate most of the day. If we're talking like the VVOS pattern from a year or two ago, like those need to consolidate all day. So by definition, those aren't happening near the open, but those are happening more around 1 or 2, 3 p.m. Like I'd say a lot of the best continuation plays, they're stocks that have made a leg off the open. It consolidates during midday, then we break out into the afternoon and close. So a lot depends the playbook. And I think, look, if that's your situation, the more important thing is adapting your playbook and finding strategies that work for your lifestyle and your constraints. So like if you can't trade around the close, well, guess what? We probably don't need to worry about after hours earnings releases. If we can't trade in the afternoon, we don't need to worry about the bouncy ball continuation play so much because it's just we're not able to trade those hours. So I think it's more so adapting yourself to the constraints that you're faced with.
Yeah, well said. Well said. You've got to trade with what you can do. And I know there's probably a lot of people in here who do work or have time constraints. And so I think Lance's point really helps with that. Next question we've got here. Hey, Lance, how has your understanding of EV expected value evolved throughout your trading career, especially as you've experienced different market cycles? Do you have any insights on identifying changes in EV? Is that through DRCs, weekly reviews, and pod discussions?
Yeah, I mean, I think like we're always learning in general. Like I'd say throughout my career, especially in the later years, the things that have changed my mind, not changed my mind, but I've gained a greater appreciation for is like how important volume capitulation is in just big picture tops. Even just like market structure stuff as far as borrow and options. And just how that stuff affects expected value over time. But as far as like so much of getting a feel for like EV and are we in a good market, a bad market, There's no way, there's no substitute for experience. Like experience is just so important, and then just doing the reflection. So I would say not just through the DRCs and the weekly reviews, but also studying your own trading data. It's so important to just be aware of your own data, and not just your data, but also those around you. Like, are most people struggling? Are they doing well? Who are the people doing well? Like, you can even just, it's so funny, like even on Twitter, you see like, oh, you know, when the low floats keep on ripping, people are blowing up. You're like, okay, you know, those people are having a tough time. Or when certain types of strategies are in play, there's people that are swing traders on Twitter, and they're doing the momentum. So you can always get a decent feel for like what's working. Even just from the internet, but a lot of it is just from being very attuned to your own trading and your own data. Like most people don't listen enough to their data as far as what's working and what's not. But yeah, it's a lot is just being very attentive to the data in front of you.
Yeah. Yeah. Studying what's working for you, so critical, because your style, even if you're following what someone else does, your style is going to be different, how you can handle that, and then how you're going to execute. So great question. Next one we've got here, just a few left. Oh, this is a funny one. What is the most in play stock for you right now? Stock or stocks, Lance? And you know, maybe you can answer
Yeah,
that.
I'd say for the most part, it's mostly being. Let me turn on light real quick. It's getting a little dark in here. One sec. That's how you know it's going for a while when it starts to, the sun is a setting.
Indeed.
So I would say for the most part, like I'm more attuned to the individual day. Like unless you've got some big kind of sector move happening, like the quantums or whatever, I'm really paying attention on a day-to-day basis. I mean, like, so if you take something like the GRAL, that's something just because of the move it's making, I'm definitely going to be paying attention to. I'm going to be paying attention to WRD because of the NVIDIA stake. I'm still going to be keeping an eye on SOUN, SERV. I'm still keeping an eye on the quantum names even. But for the most part, it's like I'm really paying attention to that specific day, whatever has the fresh catalyst, whatever has the big move, whatever has the craziest daily charts, you know, like the GRAL. So it's mostly being attentive day to day and always adapting that. But yes, I'm always keeping, you know, one eye on some of the hot sectors in general. Even right, like after the DeepSeek stuff, like NVIDIA should still be on your watch list, where you're at least typing it up and taking a peek for a while. Like Palantir is another hot name. So yeah, I'm always trying to just pay attention to whatever is staying in play, but then also each day customizing it.
Well said. Well said. And yeah, as Lance kind of pointed out, just right now is like the stocks that have been making those big moves, you know, keep on the radar, because setups, you know, often follow those big moves at different stages. So keep checking in on those. Next question here, a little bit similar. It says, do you adjust your trading when there is big news events occurring into the week? It says market may chop, etc. So I'm guessing maybe earnings stuff. That's a little bit of a tricky question, but
FOMC, I see here. Well, yeah, in general, like, I mean, it depends your style. If you're very intraday and just catching very specific legs, you don't need to worry so much. I mean, for example, you said I had a pre-market high breakout set up on NVIDIA that I took for a scalp because FOMC minutes is tomorrow. I mean, the FOMC minutes is tomorrow. Why worry about that now? Like, that's not going, like, the FOMC isn't going to magically come out pre-market. So, like, do I adjust my trading when there's big news events occurring into the week? Like, yes, but you're doing it seemingly to a way over extreme, right? Look, do I want to be long Nvidia into the FOMC minutes? No, but that isn't now or pre-market. Obviously, with some of the Trump stuff, like if I'm holding market stocks, I need to be fearful of tariff headlines, like overnight risk has certainly increased in this type of market. But like just because overnight risk has increased, or just because there could be a tariff headline, that doesn't mean I won't take a setup in front of me. Especially, you know, if it's, hey, look, if the Fed comes out at 2 or whatever, you know, I don't need to be scared at 10 a.m. or 11 a.m. if I'm not going to be holding the whole day. So like, yes, I'm aware, but like, not overly. This sounds like it might be an over fear of that. Yeah.
All right. That was actually the last. We've had a couple. So there's one other official question, Lance, and then
Yeah. So let me
Oh.
here. Yeah. Let's go to this final question. Then I'll take a whack at that long one.
yeah, the PLTR. Yep.
Yeah. Let's see. Do I execute a stop at the price you defined, or do you let it go a specific percentage? So I touched on this somewhere in one of the other questions on the chat, but no, I use the specific price rather than letting it go beyond that, because like if my level is $5, my whole hypothesis is that if we get below $5, it's going to, you know, really crack and trend, right? That's the whole point of kind of the stop, I guess. You know, any stop means my expected value, I believe, is turning negative. So no, if I think expected value is negative below my stop, why would I want to just give it more room? No, I'm always getting out there. All right, now let me take a big whack at this. This this could get ugly.
This is the big one.
Yeah, and this will be the final one, and then I'll pause some of this. Okay, so Palantir had an epic 5-minute drop with prior bar highs largely holding. So let me try and get the 5-minute. Intraday, 1 day, 5-minute. Okay. Okay, so blah blah. I went short and scaled out as it continued to drop further. I then hedged out my remaining quarter-sized runner with 125 strike calls. With the gap up open and that much of a sell-off, I was hoping for a weak close and then that at least a temporary top on the daily. Was it a dumb idea to try and swing some short with today's price action, or was that just a case of getting unlucky? Yeah, I mean, what I would say with some of this is like, I mean, the daily on Palantir is not convincing enough for me to think that this was going to be the top with very high conviction. I mean, did this have one hell of a strong reversal today? Like yes. But then this goes to the point where your best expected value is always just on the very specific leg in front of you. So like when this does this type of leg, that's a super awesome leg. When I'm trying to then think, oh, is this a good overnight? It's so hard to say, should I be overnighting this at literally not even 11 a.m. yet? And that's why it's like the best probability and the best kind of edge you have is just the leg right in front of you and not extrapolating, oh, is this going to be a good short overnight? So for the most part, I would have probably just taken the bird in the hand, especially because that is just such a big leg. I mean, especially down to like 119 point whatever. So I mean, I don't love the idea of, I mean, the most edges is exactly what you captured, and this is exactly why I don't love doing some of the big picture stuff unless I'm very, very confident. So do I think you know, it was a dumb idea? I don't think it was a dumb idea, but for the most part, I think this is why I kind of love intraday trading and just catching the legs. So I hope that helps. I saw some other questions in here real quick I think people were asking about, I don't know where I saw it now. But I think people were asking about what indicators I have. I'm mostly just using Bollinger Bands on right here. Is there anything else?
Yeah, I had everything else unless some people direct message you, Lance.
I think we hit that. Okay, gang. Does anyone have one final question before we call it? Any last things? Awesome. Well, gang, where's the next meetup? That is a great question.
That is.
I don't know. So there is going to be a Traders for a Cause Miami in early March. So Miami, I don't know if I'll do another Magnum Opus meetup just because in Miami, just because there's the Traders for a Cause one. Why do a third thing in Miami? Beyond that, I don't know. That's a good question. Maybe I'll try and sneak one in Chicago. Maybe I'll try and sneak one in New York. If I'm doing a work one if I'm visiting SMB in New York, maybe I'll just try and hammer one out there. So I don't know. I don't have a good answer, especially because we've got a second Miami on the map, but I'm going to try and hit all the major cities, especially if I'm traveling through some of them. So definitely there's going to be some more in LA, maybe San Diego, Chicago, New York. Maybe if I get down to Houston again, visit Clayton, eat more good food. Am I going to Europe? You know, just because of the distance, Europe's hard. Here's what I really want to do is like, if I'm traveling somewhere, for my own just enjoyment and life, I'm going to try and do a meetup there as opposed to like, oh my God, I need to block off a week of my schedule or 2 weeks to go to Europe. So I'm just going to do the places as life takes me, but inevitably I'm going to be in Europe. Inevitably I'm going to be in parts of Asia. And when that happens, we will full send it. Rick, you want to hit us with the last official question?
Yeah, you got
Can
him
you hear me?
unmuted. Yeah,
Yep.
yeah, you're live now.
Yeah, Lance, I think my question is mostly about risk allocation. I was working with asking to my pod and asking Roberto as well about, I noticed that based on the review of the previous months, I've been doing a good job on calculating my risk. I know how much risk I'm gonna take for each specific trade, but then I haven't done a good job on allocating more risk to my A setups versus my C setups. I've been risking, for example, more on my C setups, and I've been under risking on my A setups. So I have this risk allocation sizing scorecard, but in terms of the distribution, I don't know what's the best way to distribute my risk. Should I give, for example, A plus setups 50 to 100% my daily stop, or should I give it less? Do you have any idea?
Yep. And so I think this video is out by now, but I think you'll see a video on the what did I call it? The sizing note card. Yeah, I think the title is the sizing note
Yes,
cards.
that's right.
And I think that is going to be very, very helpful. And watching the sizing note card, I don't know if I have exponential bet sizing out yet or not, but essentially what you just said is so common for so many traders I work with. Generally, most traders that are underperforming or not doing well, when they look back at the end of the month, what they find is they allocated way too much risk to their B's, C's, or just D's that should have been no plays and not enough to their A's. And so a lot of times what we try to do is say like, okay, let's be more selective and avoid the D's. If something's more mediocre, we're going to lower the risk on the C's. But then one heuristic that I found useful is to ask myself, is this the play of the day? And you'll find that on my daily report card. And it's like, if this is not the play of the day, if I'm not like, oh my God, like foaming at the mouth, this is amazing, I tend to really be conservative because most trades are just going to be okay. But when it's like, oh my God, this is the trade I've been waiting for, that's when you want to push the risk a little bit. And so what the sizing note card does is it forces you to answer that exact question. Okay, a D, I just don't want to play, of course, but this is how much, maybe a C is going to be $100. Maybe a B is going to be $400, and maybe an A is going to be 1,000. Whatever is right for you, right? And so I think like that's the whole point of the sizing note card is so we predetermine what's right for us. And then what we can say is like, the sizing note card also allows you to say, did I risk appropriately? And if you did risk appropriately and you're still not doing well, then that means, hey, maybe I'm just not identifying these accurately in real time. Maybe I'm thinking all of these setups, I thought these were A's, but it turns out these weren't so good. What nuances did I overlook? And that's why it ends up a very powerful tool, because then like it's not random. You can say, oh, I thought this was a C and I risked $100 when this was actually really, really good. I should have risked 1,000. Why did I not connect that in real time? Then the more you refine your studying, it makes it easier to process in real time and more accurately place your bets accordingly.
Yeah, great response, Lance. And I'll say real quick, we might actually produce those sizing note cards.
Yeah, I
which would be
think
kinda
there might
cool.
even be, I think I've already uploaded a PDF template for that under the resources.
Yeah.
Yep, and Nirav just posted some good info. In case you all can't tell, there's a zillion moving parts going on behind the scenes where we're working on an Android app. I'm exploring some of the AI stuff. And so I think the best way to end this is by saying there is so much awesome stuff coming. We are trying to improve our magnum opus game every single week. Tons of new ideas. We're researching with the community channels. We are discussing whether we want to leave the Uscreen platform for those community channels in favor of Discord.
Yeah.
So, you know,
Who
pretty
all,
much.
real quick, Lance, who all is on Discord here? Can people drop a little
Yeah, can you just
something in
write
the
a little
chat?
me if you're on Discord? And is this going to be pretty much everyone? Wow, already that's
Yeah.
pretty damn high. Holy shit.
Wow. Would you guys like to see the community channel on Discord? Would anybody just
Yep. So to quickly touch
right,
on that,
yeah, okay.
so
Yep.
obviously when an interface is built into the platform, right? Like the Uscreen community channels, like there's a huge ease of access. Like we don't need to worry about user lists. We don't need to worry about just all this stuff. So in an ideal world, we were going to use those, but of course it doesn't have the same level of features. So it's very likely just due to the limitations on the Uscreen platform, we are going to do this Discord thing. Some people are saying limit the channels, and like what I will say is this will be a work in progress. We will need to iterate many times. But yeah, the more you can give us constructive feedback, the better. And that's also the great part of these AMAs and the meetups. We want to make this as awesome for you all as we can. We are working our butts off. There's so many moving pieces. So everyone, you know, patience. This is going to be the most kick-ass thing. We are working on this stuff. We are exploring the Discord, so we hear you. More feedback, the better. So I guess with that, thank you, George, for helping moderate. Thank you all for the amazing questions. I hope you all found this useful. I will be posting these AMAs, the recordings online. I know I have not posted the January one. That should be back out in about 2 weeks. We have a massive backlog of a zillion things we're working on. So trust me, we are, full speed ahead, but it just takes time because there's so many pieces. So thank you all for your attendance. Thank you all for your patience, and a lot of amazing stuff coming, especially the Tom Crawford and Jonathan Katz content on the way. So thank you, everyone.